Hi, and welcome to the next episode of Danny Brown Talks Phoenix. I'm Danny Brown, and today I'm joined by Chad Connelly of Homeowners Insurance. Thanks for joining us today, Chad.
Yeah, thanks for having me.
Chad, first, why don't you tell me a little bit about yourself, a little bit about what you do at Farmers, and give us a little bit of background.
Yeah, originally from New Mexico, I moved to Arizona in 2001. At that time, I was actually with Kinko's and before the FedEx merger. Spent 15 years with them in that world before landing with Farmers in 2012. Looking for a change and wanted something with some entrepreneurial roots where I could kind of be my own boss but still work with people. Mm-hmm. I had a college buddy who was a farmer's agent still in New Mexico, and after exploring some of the options with him, decided to kind of make the leap and open my own agency.
That's very similar to how I got my start in real estate. Real estate really wasn't even, on my mind at all. Mm-hmm. And I had a friend who was in it and kind of got me interested, asked me to, join his family team, and really enjoyed it. So it sounds like that's kind of how you got your start as well.
Yeah, it was. I don't know many people that wake up in the morning and say, you know what, I think I want to sell insurance moving forward. It's I don't want to say a necessary evil, but something that, we certainly need in our lives.
It's definitely a necessary evil.
Well, I don't know if I'm allowed to say that since I sell it, but in any event, it was just something that, again, gave me an opportunity to be in control of my own destiny, mm-hmm. but still be able to help, work with people. Yeah. And at the end of the day, certainly in instances where something bad or serious has happened, insurance can make a real difference in people's lives, and that's probably where I'm the most meaningful.
Absolutely. So what attracted you to Farmers Insurance?
So I explored some options with, a couple of the major carriers, and a couple of them you needed to pony up a big check to get started. Farmers at the time had kind of a low cost to entry. I started what we call then a scratch agency. So the very first policy I wrote was my own.
Wow.
And then I went and tapped a friend on the shoulder and another friend and kind of just grew and started, marketing and selling from there. So they are a full service provider. So I can pretty much write almost anything I come across, and things I can't, I can broker out from there. But just basically offered everything I was looking for.
What specifically does Farmers offer, or do you offer, would you say, most commonly in terms of insurance products?
Yeah, well, the top of the list is probably always going to be auto and home.
Mm-hmm.
From what we call a personal line standpoint. We also can write toys, if someone has a motorcycle, a boat, a travel trailer, things of that nature, an RV, side by side. Certainly life insurance is an important component as well, but from the business world, I can write someone's business insurance, their work comp, things of that nature, a commercial umbrella.
So it sounds like Farmers is kind of a one-stop shop when it comes to
it really
insurance.
Is. Yeah, it really is. I would say from the commercial standpoint, they're conservative. They may not entertain some of the more interesting businesses out there. But again, if I do have that type of risk I'm trying to write, I can broker that out and look for another home.
Now, can they also insure personal belongings? I recently got married, so we had to insure an engagement ring. Mm-hmm. And can they insure, professional athletes? They insure their legs, or models insure different body parts. Is that something that State Farm can do? Or I'm sorry. Wow.
I'm out of here.
Crap. Is that something that Farmers can cover as well?
So I'll say yes to the first question. The first question was related to stuff, a ring in your example. Yeah, absolutely. That's something that typically is written on your homeowner's policy or a renter's policy if you're not owning a home at this point. But you can, there's built-in coverage in either one of those policies. If you have, a nicer item, a more expensive item, then we would do something that we would add a rider or schedule the item. That's the same thing. And that gives us additional coverage, including something called mysterious disappearance. So if your wife's diamond falls out of the ring itself, you guys go hiking and get home, and now where did the diamond go? The ring is on her finger, but no more diamond. There can be coverage for mysterious disappearance if it's scheduled on the policy.
That's nice.
Yeah.
Good. Definitely good to have. How would you rate, in terms the cost of insurance these days?
Well, I would say it's relative to what you drive in some cases. Insuring a Tesla can be a little pricey compared to some other vehicles. But one of the biggest things is I don't see someone's personal credit when I do a quote, but your personal credit does impact your premiums.
That's interesting.
Yeah.
Why is that?
Well, it's basically there's something that we refer to as a insurance score. And really the insurance company, if you were going to, you're a real estate agent, so you're often speaking to people about their budget in reference to what they can afford. Insurance companies aren't looking at how much insurance you can buy, but they are looking at your credit as a basis of how likely you are to pay your premiums.
Okay.
And so the higher insurance score, the better you're going to be rewarded with a rate, much like any loan or anything else.
Sure. So let's kind of shift gears and kind of get towards what my audience is typically interested in, and that's homes.
Sure.
So maybe focus a little bit on the homeowners insurance and some of the different aspects of that. So first, maybe you can explain to me a little bit about what homeowners insurance is and what it kind of covers.
Yeah, it's a great question. So in and of itself, a homeowner's insurance policy, if something happens, the point of having the policy is to make you whole again. It's not to improve your position on where you were. If something happens, time to get upgrades. That's not the scenario, but the goal is to return you to where you were before the incident happened. So whether that's personal belongings coverage as a component of that, that coverage kind of follows you around. It's not limited to just the four corners of your lot. But if something happens to the home and it's damaged in a number of ways, then, typically you have the right policy, then you're going to have comprehensive coverage to repair the home.
How do you make sure that you have the right policy? I would imagine that, there's all kinds of different insurance programs or policies that you can get and put in place. How do you make sure that you're properly covered and that you can be made whole?
Yeah. So the best advice I would give anyone is sit down with whoever you're working with and ask questions until you get the answers you're looking for. The reality is that most of the major carriers deal with what we call an HO5, which is just insurance jargon for what is the most comprehensive home policy. You'll see some smaller carriers that typically are written through brokerages have HO3 policies, and then they have endorsements which add on or make the policy better. At the end of the day, most major carriers should be able to give you a comprehensive policy, but the policies do vary. So you want to make sure that you feel good about the company you're with as well as the agent you're working with.
So it comes down to trust.
It does. It really does.
Can you give me an example of some of the questions that people should be asking their agents?
Yeah. Again, I think if someone, whether they go online or they make a phone call to get a new home insurance quote, I think they typically look at the very first line of insurance, which is called coverage A, or the dwelling. That's the base amount to repair your home, what the home itself is covered for. So they look at that. They look at the deductible, which most commonly for a home is $1,000, but they have options. And then how much is the annual premium? So they literally get a new quote and look at those three items and think that that's enough.
Well, most people, that's all they care about is how much things are going to cost them in the short term.
Sure. That's absolute reality. But again, you don't need any insurance.
I mean, this is why Geico and Progressive
Until you
even
do.
exist.
No comment. So in any event, the reality is that first line of coverage, again, dwelling or coverage A, let's say your home is, worth $300,000. And we get that number by completing a reconstruction cost. We go in and answer a ton of questions inside a software-based estimator, and that helps us get that reconstruction cost. Now, again, let's say that we feel good about the $300,000.
So you're not looking for the actual value of the home, like what it would sell for. You're looking what it would cost to build the house.
That's a fantastic question. So if you walk out of this room today and you go help your next client buy the house, part of that purchase price is the lot.
Correct.
Okay. And so certainly a lot in Paradise Valley is maybe more expensive than in Central Mesa.
Sure.
Or some other areas.
Yeah.
Okay. But if lightning strikes the house and burns it to the ground, the lot is still there.
Sure.
So you don't have to buy the lot again. So when any insurance company does a reconstruction cost estimate, they're truly just looking at what it would cost to start from the slab or start from the ground up and rebuild the house again.
Cool. So continue on as you were explaining before.
Yeah. So back to the $300,000 estimate. So I look at my piece of paper and I'm covered for $300,000. So I'm good, right? Well, maybe. It depends on how you're covered and what the policy says in relation to certain what we call perils, things that can happen to you. So the biggest example would be, is your roof covered for full replacement cost as opposed to ACV or actual cash value?
Okay.
And another way to say actual cash value is depreciation. So let's say that putting a new roof on your home costs $20,000. And let's say that somewhere in the fine print of your home policy, it says that your roof is covered for a scheduled payment for ACV. It's covered with depreciation. So we get one of our monsoon storms and we get a little microburst and it rips half your roof off. Well, let's say that your $20,000 roof is 15 years old on a 20-year life cycle.
Mm-hmm. So
basically, the insurance company is going to say, hey, we might cover 25% of the value.
Oh.
So we'll cover $5,000 and you have a $1,000 deductible. So you need to replace the whole roof, which is $20,000.
I think this is why people hate insurance.
And we're going to pay $4,000. So, but that all goes away if you have a policy that basically says, hey, your roof is covered for full replacement cost.
Wow. So what do you advise people? I think insurance is one of those things that you think about it and you set it and then you forget it. And it's just billed to you. Sometimes you don't even see the bill, especially when it comes to homeowners insurance, because it's just part of your escrow, your mortgage payment. So what is your recommendation to people on how often they should be looking at their actual policy? I mean, I get the stuff in the mail and then I'm just like, oh, okay, cool. And then
next.
Throw it away.
Yeah. I would think, obviously, you could say, hey, I would love to meet with my insurance agent every year. And if you can do that and you make the time, everyone is busy. Yeah. I would love to meet with all of my clients face to face, right? And so that's what it comes down to. And I would say, again, if you haven't met with them, in the last couple of years, 3 years, make an appointment, whoever you're with, and do some type of review. But you could also look at yourself in the mirror and just use life triggers as a reminder. So, did I get married this year? Okay, maybe I should look at things. Hey, there you go. Did I
life insurance? Okay, through you,
and I appreciate that. Thank you. So we're looking at did I move this year? Did someone graduate? Was a child born? Any number of things. Did someone change jobs? There's a number of things that anytime you kind of have that life change, whatever it is, that could be a good reminder. Hey, do my insurance policies reflect, the changes that have happened in my life?
Do insurance agents ever take it upon themselves to go through and look at their clients' policies that they may have not talked to in a while and see, like, just do regular check-ins? Is that a thing?
So, now that I'm speaking for the entire insurance world, so I'll speak.
You can just speak for yourself.
I'll speak for myself. The reality is that if you're working with a company without agents, I don't know how that
without agents.
So major carriers like Farmers or a State Farm, Liberty Mutual, Allstate, those are agent-based companies. Obviously, there are other providers.
So you're talking like Geico, Progressive, the call center guys that you don't
more
have
call center based. I guess they could have a computer program that looks at something, or pay someone internally to randomly look at policies. I've never heard of that, but
Sure.
certainly it's possible. I know that for myself and some of my peers internally, we have the ability to run reports that look at home policies if they're on a certain contract, or if they have certain discounts, or certain number of criteria that would allow me to run a report. And now, instead of trying to look at my entire book of business, which could be overwhelming in
Sure.
any given moment, I can narrow it down and say, hey, I'm going to talk to everyone who has this type of policy, or this level of deductible, or, was written in the last, 3 to 5 years, whatever that number is, and then I can follow up with those folks from that point of view.
So what you're saying is a good insurance agent does reach out to their clients on some sort of consistent basis to make sure that they're good.
A good insurance agent should certainly be present and make themselves available.
Good.
Yeah.
Good. I like that. Can you go into a little bit of detail? I do have some clients who get a little bit fuzzy on the difference between homeowners insurance and a home warranty.
Yeah.
They say it all the time, and I have to correct them.
Mm-hmm.
My AC went out. I'm going to have my homeowners insurance replace it. And
Yeah.
So can you kind of touch on that a little bit?
Yeah, great question. Again, a homeowner's policy is going to insure your home and your valuables for, in the simplest definition, sudden and accidental loss. However, it's your home and your personal belongings, if you will, personal property, as opposed to appliances. Appliances, or for that matter, anything in the house, is not insured against wear and tear, or just end of life. So if a water heater breaks down over 10 years, or however, whatever the normal life of that particular component is, insurance is not going to cover you for that. Now, in the water heater example, if something broke down and water went all over,
that was going to be my next question.
Home insurance can cover you for the damage. But the difference is, and I think this has probably showed up more in your world than anything, sometimes in the transaction of a purchase, through the negotiation, maybe the purchaser will ask the seller, hey, and I want you to throw in 1 year of a home warranty.
Absolutely.
So,
Yeah.
you
Very
walk
common.
in to buying the new home, and everything looks pretty, but you don't necessarily know what's going to happen with some of the appliances after the fact.
Yeah.
The air
It's usually 6
conditioner,
months.
right?
Something always breaks within 6 months.
After 6 months.
Yeah.
So the air conditioner, some of your big ticket items.
Yeah.
So that home warranty, typically you have the ability to pick a couple major items that you're most concerned about. You pick a deductible, and it's separate. It's a different company. We use a different company, a third-party entity basically. And if something happens, then they'll come out to service it or work on it, or, provide service through that manner.
Okay. You mentioned a word just a minute ago, deductible. I've heard from a lot of financial advisors that recommend that you have the maximum deductible that you can afford, because that brings your premium down. What is your stance on that?
Yeah, I have clients that run the spectrum on that, from people saying, look, I don't want to file a claim, but if I do, I want the smallest punch in the gut possible.
Mm-hmm.
So on a homeowner's policy specifically, that's going to be $500 deductible. I have
Seems
other
really low for a homeowner's insurance policy.
There are people, and not every company offers that anymore. So, but Farmers still does. So other folks will say, look, again, I'm going to take the same mentality that I'm not going to file a claim unless it's dire straits. But as a result of that, I want a $2,500 or higher deductible, so I can save that money, on the annual basis. So, at the end of the day, and you just said it, as high as you feel comfortable, I think the general rule of thumb is, save enough money for 6 months.
Yeah.
If you lost your job or something like that. And I don't know how
we're
many people are in that position.
We're Americans. We don't do that.
Exactly. So, but the reality is, again, the most common deductible is $1,000. I think I personally have a $1,500. But you can ask whoever you're working with, just say, what is the premium with a $500 deductible, $1,000, $1,500, $2,500? You can do your own math to say, okay, if I have a $1,000 deductible compared to $2,500, I save $23. Well, saving $23 against $1,500 additional and deductible, I would have to save $23 for a whole lot of years to make that up.
Yeah.
So maybe the math says, I'll just keep it at $1,000.
Yeah.
So, again, that's a question for whoever you're working with.
Okay. Does farmers, is there an advantage to bundling your insurance, and what is that?
Yeah, so bundling just means that you're being rewarded for giving that carrier multiple lines of your insurance. And almost every carrier, if not every carrier, does that nowadays. Our discount specifically is 20%, so it applies both ways. So if you have auto and home, you're going to get a 20% discount on each policy. Now, if you add life insurance to that, again, that's an additional discount. If you have a toy policy, you have a motorcycle or a RV or a travel trailer, those are just additional discounts that just get added together.
Okay, great. Is there a difference? So, Phoenix has homes that were built in the 20s, 30s to today. Is there a difference that someone can expect based on the age of the property?
Yeah, absolutely. And obviously, I go to quote a home, I can go into the county assessor and get some information and see. Sometimes the system will pull up the original build date. And you think about, older home in old Scottsdale that's built in the 1930s or 40s, and a brand new home out in East Mesa. Let's say that they're both 2,000 square feet. Well, obviously the home that's built in 2018 has a new roof and all kinds of improved efficiencies, the wiring and plumbing, and so on and so forth. So this number is a little bit arbitrary, but that home in Scottsdale, for the exact $300,000 of dwelling insurance for the same person with the same credit score, quoting both of those houses, that home in Scottsdale might be $1,000, and the one in East Mesa, $300.
Really?
$400.
Wow.
So a newer home is going to be significantly less to insure because, frankly, the risks are less. It does have that brand new roof. It does have brand new plumbing. So the chances or risk of something happening are significantly less.
So there's a ton of flips taking place all over Phoenix. And so a lot of flippers, what they're doing is rather than scraping the house completely and building from scratch, so it's a brand new build.
Yeah.
They're leaving a single wall, or leaving the foundation, and it's classified as a remodel.
Okay.
So the build date would still show up as, 1950 or whatever.
Yeah.
But everything in the house is brand new. How does insurance look at that?
So that just comes down to underwriting. Obviously, if you call me for a quote, I should be asking you questions about the home. And one of those questions is going to be, has there been any type of, refurbishment, remodel inside? And so I can go in and tell the system, hey, there is new plumbing, there is a new roof, there is, these updates, and the system will reflect that in the premium and risk accordingly.
What stops someone from lying to you?
From an external perspective, anytime we write a homeowner's policy, at some point a third party is going to cruise by and look at the home and make sure that, one, they're kind of auditing me, that if it's a two-story house, insuring a one-story house is less than a two-story house. So they're going to audit me to make sure that I didn't write the two-story house as a one-story. Okay. Well, conversely, they're going to say, okay, if there's a brand new roof and they see that there are holes in the shingles and, part of the roof is falling down, then, that comes back on me and we have to correct that, whether the policy gets canceled or updated but there's no internal audit process where myself or another party is going to run through your house and say, prove it to me.
So they don't have to provide any sort of evidence that say the electrical has all been updated or plumbing.
In some instances, yeah. In some instances, especially if a policy is, let's say that we have a policy written on your house now, and then you go through those steps, then I would have to collect, paid invoices and things of that nature and give them to underwriting to then update and have those changes made.
So if you do a remodel to your house, you should contact your insurance provider and let them know that you've done, because that could affect your rate?
Yeah, for a number of reasons. Again, first and foremost, if you guys went to dinner tonight and lightning strikes the house and burns it to the ground, do you want yesterday's old cost to rebuild it? Or do you want the updated correct cost because you just refurbished the whole place and added on an addition? So any of those type things, you want to make sure that, it had old carpet and you put in brand new, crazy Italian marble. Okay, well, you want the insurance to reflect if something happens of replacing what's there.
So again, this goes to how do you keep people from lying to you? If the house burns down and it had the nice finishes and things in it, and that all just is up in smoke, for pun intended.
Yeah.
How do they prove that they had all those nice finishes? Are you going to, or is the insurance adjuster going to ask them to provide copies of? I mean, if everything just burned up, like, what do you do?
I feel like maybe you need some better friends. No, on a serious note. So certainly I don't work in claims, but as a general rule, if
I guess what I'm getting at is, should people somehow document what they have in their house?
Absolutely. And again, here's a suggestion. If I'm working with someone, at some point, hopefully this has come up, and I said, hey, if you have a smartphone, the best thing you can do is put it on record mode and walk through your entire house. And then save that video someplace in some type of cloud. Some people are like, well, I put it in my safe. The safe burned up in the fire.
Sure.
So put it someplace off-site, put it in a cloud, do something. So remotely, you can get to it. It comes down to if, you have a track home that your house is, one of 6 models and the entire neighborhood is built like that.
Right.
And it gets burned to the ground, which we don't have a ton of those type of incidents in Phoenix, but if it did, and you come to the adjuster and say, hey, I know when I bought it, it was a normal average home, but I've done a ton of upgrades, and we had, gold-plated doorknobs, and we had Swiss marble everything, and it was so nice. You said, no problem. Show me.
Yeah.
Like, who did you pay? When did you pay? Who installed it? And hopefully you have some of that documentation, and they're always going to meet you, in the middle and say, okay, absolutely. You showed me a picture. I can see exactly what was here. You'd be surprised what those guys can uncover during a claim. They're pretty good detectives when they need to be.
What about theft? So, if somebody breaks into my house and steals all my stuff, how do I need to provide evidence that I actually owned these things? And what do I get reimbursed? I mean, if I have, television, for example, and I spent, 3 years ago, I spent $2,000 on this TV, let's say. But by today's standards, that TV is now worth, I don't know, 700. Like, what do I, help me out here.
Yeah, absolutely.
I don't even know what I'm trying to ask.
Yeah, no, I got you. I'm with you. So again, back to personal property, much like my roof example earlier, you can be covered for actual cash value or depreciated value, or you can be covered for full replacement cost. Now, I would say if you wrote a policy with most major carriers, it should come with full replacement costs for your personal property, almost without question.
Okay.
And some of the, I don't want to say older policies, but some of the smaller companies that are still writing a different contract, they can add in full replacement cost by endorsement. But that's something that, as a staple, every time I get a quote, I should understand, hey, I am covered for full replacement cost for the house as well as my personal property. So when it comes to, your normal personal property, typically, and we'll use that $300,000 amount of insurance.
Sure.
Typically, the most major carriers are going to give you 70% of that number as personal property coverage. Now, again, if lightning strikes the house and burns it to the ground, it's going to cover under full replacement cost. It's going to cover whatever your stuff is. So if you have a TV and you bought it at Costco 10 years ago, they're going to give you today's money to buy a similar style, quality, brand, things of that nature. Now, when you get into kind of specialty items, and that can range anywhere from antiques, artwork, jewelry, collectibles, things of that nature. When it comes to theft, every carrier is going to have some type of specialty limit, whether it's jewelry, $1,000 per item, and maybe a $5,000 aggregate total for theft. So, if your wife had 25 different $1,000 rings, well, the $1,000 each limit is good, but the $5,000 cap is only going to cover 1/5 of the total if all 25 are stolen.
So that's where you would need to insure your
That's
jewelry
where you
separately.
would need to potentially increase it.
Yeah.
And as I mentioned before, if you have a high value item, especially, a wedding ring, most common, scheduling that item adds that mysterious disappearance. So if a stone falls out, now, you're actually covered for that. And depending on the value, you may need a detailed receipt. You may need an appraisal. Or for higher value items, you may need a more recent appraisal, perhaps within a year.
Wow.
Yeah.
That's interesting. Probably for things I would imagine like art
or high value rings.
Yeah.
Yeah. Some of the rings or watches get up there sometimes.
You had mentioned a word, you may have explained this before, but what is an endorsement?
Yeah. An endorsement simply is just adding on to the policy, filling in a gap or improving a coverage perhaps. So again, on the older contracts, you would just have a depreciated value for your TV, for your personal property. And so they might add a full replacement cost endorsement. And now the policy is made better through that endorsement relating to those items.
Okay. How about bodily injury? If somebody's on my property and they hurt themselves, or God forbid, we're in Phoenix, there's a lot of swimming pools.
Sure.
If somebody drowns, is there insurance in place, or can you not have enough insurance in place for those types of things?
That's a great question. I'll tell you that you don't have to be a millionaire to be sued like one. So on an auto policy, the very first line of insurance is literally bodily injury.
Sure.
It's about your responsibility to others if you hit someone and, they're injured. On a home policy, it's about the fourth or fifth line down. And it literally is just referred to as personal liability. And so if something happens, you have that bucket of money, if you will, if someone then sues you. And maybe a dog bite is the most common.
Yeah, I didn't think
someone
of that.
tripping and getting injured on a property. But that part of the policy follows you around. Again, if the dog bites someone, your dog bites me. If I'm across the street or with the dog park in Chandler or up in Flagstaff, that policy still provides coverage. It extends to you there. So it's not just on the four, corners of your lot.
Okay, that's good.
It is. And relatively speaking, I would say $300,000 is probably the most common liability limit on a home policy. But a lot of times to raise that to $1 million is under $50 for the year.
Wow.
So,
I would say it's probably very easy to spend over $300,000 on medical. And
I don't think any of us like
$50
like hearing about, insurance rate increases.
For sure.
I get lots of phone calls about why did my rate go up, but I think we all also know, how much healthcare seems to skyrocket year after year.
Yeah.
And so, one night in the hospital, costs $50,000 and, all kinds of crazy stuff. So medical costs, if something happens, and unfortunately I've heard many a story where even family members who were best of friends and giving each other a hug. And then I know of a story where a family dog bit a young baby, and the family doesn't talk anymore.
Jeez.
And it was over $1 million settlement.
Wow. I can't imagine suing my own family but
yeah,
stuff happens.
It's a sad story. The reality is, and what happened, and it was purely innocent, and some precautions had been taken, but something happened, and people...
What about children drownings or just people drowning in general? What are some things that people can do to protect themselves to make sure that they're not liable?
Yeah. So they're city by city in all of Phoenix Metro. Each city has kind of their own ordinance in terms of getting approval for a pool, or obviously if it's already built. I know in Mesa, they require you to have some type of fence around the pool in some regards. If you have a sliding back door, you have to have a locking mechanism that basically, in addition to the handle to open it, there's a secondary mechanism that has to be, opened to allow the door to open itself.
Some cities have self doors, all exits or entrances to the backyard need to be self-closing.
Yeah. So there's a number of things in place like that. And the reality is that, in Phoenix, I see people occasionally in other parts of the country where their backyards are literally open.
Yeah.
There's no fences.
Yeah.
And that seems, I don't know, it'd be like me running around naked in the backyard or something. It feels completely foreign and
Yeah,
odd.
right.
But, we typically don't see that. Almost
Right.
everyone has a fence here. But, as a general rule, I would make sure that, it's not a bad thing to have we have a little padlock on our gate just to prevent people. At the end of the day, if something were to happen, people are going to try and prove that you were negligent. You did something wrong or didn't take steps that the reasonable average person, might have been able to prevent. So locking doors, having fences, things of that nature, hopefully will keep you in a good place.
What would you say are some of the most common claims that you see in Phoenix?
Yeah. I don't want to say almost all, but certainly the lion's share of claims we deal with are water related. And whether that's this time of year because of the monsoon storms and dealing with, crazy rains and things of that nature. But
So is that like roof leaks or
most commonly,
Okay.
that's what we see. As it relates to weather anyway. We get a little microburst or a sudden thing of wind and it rips up some shingles or something happens. And now, rain is coming through the roof and dripping on your head through the ceiling and things of that nature. But the most common overall is something as simple as a water line from an ice maker in a refrigerator
Oh yeah.
or a dishwasher. So, people run their dishwasher, off to work, push the
Yeah.
go button, and now, that's a good 1/2-inch tube running water for hours and hours. Water creates a mess in a hurry,
It does.
mold and otherwise. So typically water issues are the most common.
Something that I've started recommending to clients to do, especially in like Central Phoenix, Scottsdale, people who have homes that are older than probably 1980, is to have additional insurance in place if the sewer line under their house fails and they get sewage back up. I've seen too many times and actually have had past clients where that's happened and the inside of their home just gets trashed with grossness and it's very costly to fix. Does Farmers offer that? Is that something that you recommend as well?
Yeah, absolutely. And it goes back to the word you asked me about, endorsement. You can add a backup of sewer or water as an endorsement. You can add it in buckets of money, 5,000, 10,000, 20,000. But yeah, and again, it's really a key when I'm doing a quote. I almost put it on not every house now, but certainly a lion's share of them. And certainly if it's in an older neighborhood, it's just one of those things that, again, don't need any insurance until you do.
Right.
But that's really an ugly one if you don't have coverage and something like that happens.
Yeah, it's pretty bad.
It is.
So something that has really taken kind of the everybody by storm are Airbnbs and VRBOs.
Yep.
Is there special insurance that people should put in place if they're thinking of turning their home or buying something and turning it into a vacation short-term rental versus if they buy something as an investment and just have a normal renter in it?
Yeah, great question. So I'll tell you that it really depends on, and you just alluded to this, as a primary home, if I have my primary home, but I know that I leave for the summer for a month and I want to make some money and rent it out, we literally would have to cancel the primary homeowner's policy and write a short-term rental policy as a secondary policy. If you have a home that's it's been a traditional landlord, and we have a landlord policy on it, and now hey, you know what? The last 2 renters haven't worked out. I want to see, I want to go Airbnb route and see if I can, make a little bit more money just doing short-term rentals. I literally can just call underwriting and have them flip the switch, and now it's a short-term rental type policy. But it's imperative to have the right coverage.
Sure.
The worst case in the world would be for something to happen, and claims basically say you have no coverage because you don't have the right policy.
So is there a cost difference between primary home coverage, traditional, rental home, and doing an Airbnb or even a vacation home?
Yeah, absolutely. And I'll ask this politely. If I was living in your house tomorrow Do you think I would take care of your house as well as you would?
Oh, absolutely not.
Okay.
Yeah.
And so it's a different risk.
Yeah.
And so, generally speaking, it is going to be a little bit higher.
Mm-hmm.
It's not generally crazy, but, another instance where people can get into trouble in that realm is selling a home. So almost every traditional homeowner's policy that you would have on your home as you're living there has limitations over time. So if they're purchasing a new home and the old home hasn't sold yet, well, depending on the company, sometime after 30 days, 45 days, maybe 60, maybe 90, certain coverages literally either get turned off or significantly lowered.
Why?
Because again, the risk has changed. You're going home every day. So if a pipe bursts, worst case scenario, you're at an 8 or 10 hour workday,
Okay.
and then you're going to go home. If I'm living someplace else and enjoying my life, and I have my old house that I care about, but it's over there and I'm not thinking about it, and a pipe bursts and no one's been in the house for a week or 2 or a month, that can create an enormous amount of damage.
So what you're saying is there are time limits based on vacancy?
Absolutely.
Okay.
And at certain points, we actually have to write a vacant policy so that the proper coverage is on there. One of the things that typically will be limited is vandalism. So if someone, again, breaks into a house, and there's definitions of being vacant, nothing is in the home, it's literally empty.
Mm-hmm.
And someone breaks in and goes to town and turns on all the water and spray paints the whole house. In some cases, there could be no coverage for that.
I had a listing once where somebody broke in and spray painted and graffitied everywhere on the inside.
Yeah. Well, hopefully it hadn't been on the market very long, and so none of the coverages.
It was bank owned. I mean, the bank owned it, so
okay,
nobody really cared.
So no one cared. But yeah certainly
Screw
that
the
could be a personal punch in the face if it had been on the market for a while.
So let's see. If I'm doing a remodel of my house, do I need to get additional insurance in place to cover, the people that are coming and going? If anything happens, electricians doing some electrical work and they connect the wrong wires and start an electrical fire. Do I need to have particular insurance in place to cover things like a remodel?
Yeah. So another great question. So I would say that go back and talk to whoever you're working with to see what, their policy allows for. But if the remodel is significant, you may need to write a course of construction policy that, again, factors in those types of risks.
Yeah.
In terms of, covering the liability of the employees doing the work, certainly know who you're working with and make sure that those people are fully insured.
They need to be insured.
That's the first thing. You don't want someone, I commonly give folks an example that if they have a landlord, they have a rental home and they're, renting it out to someone, they should require that person to have their own renter's insurance.
Yeah.
And name them as an additional insured.
Oh, really?
So if I'm renting home from you and my dog bites someone and I don't have any renter's insurance, the person that my dog bit is going to try and sue me. And when I have nothing, they're going to come and say, who owns the home? So now you're the one who let me with my mean dog into your home. So now you own it.
That comes back to
liability
what could you
can roll up that
prevented?
way. Exactly. So anytime someone has a rental property, I tell them, just best case, just ask they're relatively inexpensive. Ask them to get a renter's policy. It doesn't cost anything extra to have the person added as an additional insured. And now my renter's policy becomes your first layer of protection.
So if I have a tenant and we do that, does my tenant get any of my personal information to do that?
No, just the name.
Okay. So I'm not opening myself up.
Yeah, if you had the rental property in an LLC or just you owned it personally, either way, all you're giving them is the name.
That's a really good point. You just said LLC. So if somebody is doing investment properties, whether they're Airbnbs or traditional investment homes, would you recommend that they create an LLC to house those properties to protect themselves?
So I'm not going to speak on legal matters, not being an attorney. I'll save that for other folks. But I will tell you that not every insurance company will title policy in the name of an LLC.
Okay.
However, the company I work with for rental properties will.
Okay.
So
Good.
I'll say that.
So just a few other questions that I have left. Does the insurance policy naturally increase as my home value increases?
Certain companies have, and you can sometimes read this in the fine print, automatic kickers that each year they're going to add 3% for inflation. That's, I guess, good in the sense that hopefully you're safeguarded. But what if, as we've seen the market in Phoenix appreciate and depreciate, I don't want my premium to arbitrarily increase every year just for the sake of increasing.
Yeah.
So again, our reconstruction software is, third party, and they 4 times a year basically do an audit to look at construction costs, the cost of labor by zip code, and they back end load that data into our software. And if there is something, there has been an increase, then there is an appreciation at the next renewal. But it's not arbitrary just for the sake of doing it.
Sure.
It's all, typically inflationary driven. And at the end of the day, we're just trying to make sure that the homeowner is properly insured. Most policies nowadays have extended coverage beyond. I kept referencing the $300,000 amount of insurance for the home. Most policies nowadays have some type of extended replacement cost kicker, so that maybe it's an extra 10%, 25, as high as 50. We actually last year launched a guaranteed replacement cost for the home itself.
Wow.
So if we've done the reconstruction cost and it meets the matrix, I can add that endorsement that you have guaranteed replacement cost, and that way you can kind of forget about the inflationary measures. We've done the due diligence, and the company says, yep, in that zip code with all that build, it fits the criteria. And now you know that if, in the worst case scenario, lightning strikes and burns the house to the ground, I'm fully covered and they're going to rebuild it.
So as technology gets more and more advanced, we've had conversations about this before, but a bumper in a car is no longer a bumper in a car now. It's a computer system, and there's cameras everywhere. Houses are becoming, I think Amazon just partnered with a builder and created Lennar and created their first smart house. I'm guessing the insurance rates for just everybody are going to continue to just climb because stuff is just more expensive. And again, you're not just replacing a piece of plastic anymore. You're replacing all the computer chips that go with it. Is that something that you're predicting that will continue to happen as well?
Yeah, I mean, so we're certainly seeing that right now on the auto side.
Yeah.
As you just alluded, we had a conversation about this the other day. A bumper used to be a bumper, and now it has, a backup camera and 5 sensors in it. And to further that, certain repair shops now are even concerned about repairing that bumper because at the factory, the paint was sprayed on at a certain degree of thickness. And so that sensor is properly calibrated. Well, if they overcoat their paint and it's now just a little bit thicker than it should, and I'm backing up and I run over the child, the family pet, or, something worse, a person okay, now I'm going to turn around and sue the person that repaired it because now that sensor was, improperly repaired. So now when they could have repaired it, they just replaced the whole bumper. Well, that just drives up costs across the board. And that's universal in the industry, not unique to any one company.
For sure.
Well, as you relate that to, the future of homes, it's going to be a similar type situation where it used to be a wall, but just drywall. But now there are sensors in it and all this additional wiring because of the special cooling functionality or whatever, the future is going to have in store for us. But, certainly a house will no longer be a house. It will have to be hardwired for all the different things that, the future has.
Will my rates be affected, when Miami's underwater? So, when natural disasters hit other parts of the country and all these people are all, calling their insurance company and trying to be made whole, does that affect everyone?
The simple answer is yes. It absolutely does. And it's not unlike health insurance. I know when the last major health initiative was rolled out, there was this belief that every healthy person would get insured and they would be contributing to the pool of money,
Sure.
but not necessarily taking anything out. And, we've seen some challenges with that. But in any event, as it relates to this, it's the same pool of money. So I know that, speaking for the company I work with, our state operates independently, and we certainly have our own, P&L sheet for the state. But the reality is that not unlike on a smaller, more micro scale, if a bunch of people go and get their windshields replaced and go to one of the vendors that double charges and gives away free steaks and $500 gift cards and everything else, again, that just drives up the cost of the insurance company's bills.
Sure.
Well, every insurance company's goal is to have enough assets to pay out claims immediately if something catastrophic happens.
Yeah.
And so it's a really easy scale to watch. If claims go up, rates go up to keep that balance sheet.
Yeah.
Exactly. And it's really that simple. So I would like to say that we're somewhat immune from those things because other than our, few rainstorms during the summer, we don't have tornadoes, we don't have hurricanes. We're a pretty fair weather state.
Yeah.
But
we actually see our population increase when there's natural disasters in other parts of the country.
Yeah, people say, "Hey, once was enough. I'm out."
Yeah.
So the reality is that we all pay for those types of things.
Can there be a difference in the cost of your insurance just based on location alone, like zip code, or I think what I'm getting at can crime statistics and those types of things, the school ratings, can those impact what your insurance rates are?
Yeah, when you speak to crime, there's absolutely no question. One of the most surprising things that I use as a common example is, if you called me and said, "Hey, can I get a auto insurance quote?" and I'm going to go buy a new car, but I haven't decided. It's either going to be a brand new Ford Mustang or a brand new Honda Accord. Which would you guess would be more expensive?
Ford Mustang.
You would think, and it's not.
Really?
Because the Honda Accord is commonly, at least in these areas, more highly stolen.
Interesting.
And so when it relates to home insurance...
Because it's easier to steal?
I don't know why they're popular. I guess if I ever meet a thief, I'll ask them. I ever run into a auto thief, but just from statistics that we get sometimes, that car is sometimes more frequently stolen. So when you look at that, again, I don't necessarily have a big cheat sheet that says there's a lot of theft in this zip code, but it's absolutely a factor. If they can, in the back ends of the systems, if they can say in this zip code there is more crime, well, it's a higher risk. If I have a house up in Payson or Flagstaff and it's remote, maybe the crime is significantly less. However, on the flip side of that, my fire line score, being amongst the forest, would be significantly higher.
Sure.
And that's a whole different dynamic. Obviously, we don't face that here in the valley.
No, we don't.
But, there are a number of things that absolutely factor into that.
So when would you recommend someone talk to somebody like you during the housing process? So if I'm out shopping for a house and I found something that I like, when is the appropriate time to talk to you about, the potential cost of insurance to insure that home properly?
So if it's someone who's already a client of mine, and I say this universally, whether they're shopping for a home or auto, specifically on the home side, I say, hey, look, you don't have to wait till you make an offer. If you're interested in a couple houses, whether you're looking online before, to give you examples of what you're looking for, whatever it is, if you have some places that you're interested, just shoot me the address. I can run a quote, and that's going to do two things early on in the process. That's going to give you, that exact premium. So you can say, okay, divided by 12, that's how much added into my monthly payment insurance is going to be. The flip side of that is, as a part of doing the home quote, I'm going to see if they've had prior losses. So almost universally now, every agent asks, the home seller for a claims history report, but I can tell you, even before you've made an offer or really gone in, hey, this had a $17,000 water loss last year. So you should probably look around and just ask about it. How was it repaired? When was it repaired? Who repaired it? You probably know more than I that should be disclosed.
Absolutely.
However, I'm pretty confident that it not always is.
Yeah, I mean, there's some situations where sellers don't actually have to provide an insurance claims history report or even a seller property disclosure statement if they've never lived in the property.
Okay.
If it's always been an investment. If they're buying it and flipping it, they don't have to provide any sort of disclosures. It's kind of a small loophole. So that's really interesting that someone can call their insurance person to see if any claims have been made against that property in the last 5 years.
Yeah, and it's really, completing a quote, at least preliminarily. You could, obviously meet to review and make sure the details are fine. But I can run a home quote in less than 5 minutes and have an understanding of whether there were claims or not. So, you then are now empowered and walk into that conversation, more well-equipped with more information.
So it sounds like very early on in the process, people should start talking.
Yeah, and it doesn't cost me anything. It doesn't but my time, right? And if I want to be valuable to you. So if I can say, hey, give me 5 lists, again, I do it on the auto side. I have a client that sent me a list of like 20 different cars that he was potentially going to buy. But again, if you're looking at that home in older part of Scottsdale or Phoenix or PV, wherever, and you think, I love the house, but I love this other house, and the insurance premium is significantly different, that might help you make a decision early on.
Yeah, that could tip the scales for sure.
Yep.
So I want to finish up with just some quick fact or fiction questions that we have for you.
Sure.
Homes near fire departments and or fire hydrants cost less to insure.
That's fact.
That is a fact?
Yeah, it's actually an underwriting question. And again, it may vary by company, but we ask, is it within 5 miles of the nearest fire department?
Okay. Can you reopen a claim after you receive the check from an insurance company?
Yeah, absolutely. And I've actually been involved in a couple as it related to auto total losses where, they thought, okay, it seems like a fair evaluation. They got the check, and then whether it was talking to me, talking to a neighbor, who knows what, later decided, hey, I feel like maybe that's not enough. And we were able to go back to the adjuster and say, hey, here's some additional evidence. Here's some additional, some same vehicles that were, of higher value. We feel like we need a little bit more. And the same thing on the home. If there was something that I completely forgot, I had this done, and here's the receipt, and we needed to reevaluate something, absolutely can do that. I
would argue that most insurance companies probably undershoot in terms of the amount of money that they send to you in the form of a check, because they much rather you cash that check than actually, and I'm speaking mostly to auto, would rather you just cash that check and not get the car necessarily fixed. Do you find that to be an accurate statement? I mean,
I can only speak for my own company in the claims process. And I'll tell you that, everyone has their biases and feelings, but I will say that one of the things I'm most proud of about my company is the fact that we've had some pretty interesting claims.
I love the commercials.
And the reality is that, my clients have really walked out being the winners.
Yeah.
Whether it took a little bit of arm wrestling or passionate conversation, they were able to walk away feeling very content, with what they actually were given.
Good. So is an insurer able to cancel your homeowner's insurance on you?
Okay. Again, almost universally now, almost all the larger carriers will non-renew you at the following renewal if you have 2 paid losses, and there's some variability on how much was paid out or whether they were both water losses. There's some fine print within there, but almost all of the major carriers now will non-renew you if you've had 2 claims within the last 36 months.
So you can be dropped from your insurance if you need to use your insurance, but you've used it too much?
On the home side, yes. Completely different on the auto side. Okay. On the home side, yes. And it really comes down
what if you just had really bad luck? Like, your house flooded, you had it fixed, then you got struck by lightning and it burned down. like you just had a really shitty 3 years. Your insurance could just say, nah, here's some more shitty news, and kick you out the door.
So I will tell you that there are some circumstances that could be a little more forgiving. When we have like a week ago or so, we had that round of monsoon storms in the evening. Yeah. And one of those days, there was basically enough activity that we declared a catastrophe. And I use that term loosely because certainly our catastrophe is nothing like they've seen in other parts of the country. Yeah. But it's not supposed to diminish what's happened in other parts of the country. It simply just means we had enough claims activity that it wasn't one person having a bad day. It was a storm, and it happened. And so when in that environment a catastrophe is declared, then the claim doesn't count against you. Now, again, you mentioned the word flood a second ago, and so I just want to make a clear delineation. Normal homeowners insurance will never cover you for Noah's flood, for rising water.
Interesting.
So even during a monsoon storm, it's backing up, and it's flood water. Your backyard is not graded correctly, and flood water is rising and comes into the house, not covered. Got to have a flood policy for that. Flood insurance, completely different policy. It's a federal thing, so you can get it from any carrier, and it's all the same price, but need a flood policy for that. But back to the original point of being dropped or non-renewed. So, the reality is, knock on wood, I've been in my current house for going on 11 years. I've never had a claim.
Sure.
So the hope is in 3 years, you don't have two that are higher amounts and paid claims.
Okay.
But again, there are scenarios where stuff like that happens. Then when one falls off, we could rewrite you in the primary line again, but we might have to go a separate route during that time.
So if you're dropped from your insurance, I imagine that it's harder to get picked up by another insurance carrier.
So in the same way that most of the major carriers will drop you for having to, most of the major carriers will also not write you if you have two in the last 36 months. So it's almost universal. And so we would have to go to
somebody like the General.
We would have to go to a secondary market for someone that had a little bit more lax underwriting rules. Okay. And typically as a result, you're going to pay a higher premium.
Okay. So fact or fiction, if someone is breaking into my home and they hurt themselves, can they sue me?
Again, that's a legal question for an attorney.
Well, I mean, insurance-wise, like, do I have to have coverage in place to protect myself if somebody breaks into my house and injures themselves?
So if, and I'm not making that decision, but if they did try and sue and somehow you were found at fault, which I'm not touching, but the liability, generally speaking, the liability coverage in your homeowner's policy is going to cover you for people being injured at the house.
Okay.
Now, whether or not there's some law that I'm not touching that says if someone, illegally enters your house, then they're exempt from, pursuing you, I have no idea. But
all right. So your pets can make it harder to buy comprehensive homeowners insurance, fact or fiction?
I will say fiction with an asterisk.
Okay.
So, on a primary home policy, this is you and your home. Farmers doesn't care what kind of dog you have. You can have a wolf. They just can't have bitten someone previously. You can have a pit bull. You can have a Doberman. You can have whatever you want.
But you can have a
three.
wolf.
Whatever.
So does that carry over to cats? So you say I could have a wolf. Could I have a lion?
I'm going to say I need to check the fine print on that, and I'm going to go with no. But yeah, so in any event, I think the underwriting terminology actually says wolf hybrid. So maybe it was like crossbred.
Yeah.
So maybe you
like
can't have a full-blown wolf or something. But in any event, where there are a number of major carriers who outright will not write you if you have a pit bull or other types of dogs. Now, if it's a rental home, it's a little bit different. But
which I would argue pit bulls are amazing dogs. For whatever reason, my gym that I go to has all of a sudden just had an influx of pit bull puppies.
Yeah.
Everybody has like 2, 3 or some sort of pit bull mix, and they are just the nicest, friendliest dogs.
Yeah.
I think they get a bad rap.
Yeah. Oh, they absolutely do. A little shout out to Pity Me Dog Rescue, someone I've worked with previously, but Yeah, they specifically work around Pitbulls, and yeah, it's all about the owner and how they're treated.
Yeah, for
Not that
sure.
we're here to talk about dogs, but in any event, primary home, you can have any kind of dog you want as long as they've not bitten anyone. We're totally fine.
All right. Is there anything that I didn't talk about that I should have? Anything that you would want to mention?
You know, again, insurance is unique to individual. You know, what I value may be different than what you value.
Sure.
Whether it comes to your personal belongings or the house itself. Some people view a house as a commodity and it's just a thing. Some people view insurance as a commodity and it's just a thing. A lot of people think that auto insurance has personal property coverage.
Mm-hmm.
So if your laptop or luggage gets stolen out of your car,
That's a great point.
they think you file a auto claim, and there is never any personal property coverage on your auto policy.
It's all homeowners
It's all
or
home.
renters, right?
It is. And so anytime you're going to file a home, renters is different. But because we now know that filing 2 claims in 36 months could have negative impacts,
Sure.
anytime someone wants to file a home claim, I want to talk to them first.
Yeah.
And we have I'm backed up by a 24-hour call center that if it's, 1 a.m. on a Sunday morning or whatever, and you don't want to call me, you're welcome to. Most of my clients have my cell phone number. But if they do, for whatever reason, call the call center directly, the reality is I just want to have a conversation with you so we understand. Let's do the math. And,
How's that claim going to impact you going forward?
Exactly. And you asked me earlier, what some of the most common claims are, and they are water-based.
Yeah.
So I work with a couple mitigation companies. So if you were to call me and say, hey, I just got home and there's water everywhere, I don't know where it's coming from, but it shouldn't be here.
Yeah.
What do I do? Well, I'm going to call one of the companies I work with, and because you're one of my clients, they're going to go to your house and waive the trip fee and start being a detective.
Well, the first thing you should do is turn the water off to your house.
Well, I'm just saying you just went out to dinner and came home.
And then make
but
the call.
in any event, absolutely.
Yeah.
But I would say that a large percentage of the population don't know where that is or how to do that.
I would beg to differ that a large population of my clientele knows exactly where their water shutoff is.
We should get your clients together with my clients, or I should talk to your clients or something like that.
Your clients could all become my clients.
We'll figure something out. Okay. But in any event, yeah. And again, education is key, right?
Yeah, it is.
Absolutely should know that. But, the reality is that if you're going to file a claim, let's just do the math, because you can't unding a bell. And so when it comes to a home claim, you're always going to have that mark, even if the claim isn't paid, or even if so you don't want to, go to sell the house and now you have claims on there, even if they weren't paid, because they're going to say, well, what happened here and what was going on there?
Right.
So, you just create more trouble than it's worth. So we just want to have a conversation.
I think my biggest takeaway from this conversation is that I should not just toss out my insurance information when I get it in the mail. I should probably check in with my insurance agent once every couple of years.
Yeah, at a minimum. At a minimum. I would say that if you've had a face-to-face sit-down and really reviewed everything and you feel like you have a good understanding, maybe it's okay for a little bit longer time. If I haven't had any of those life triggers, I haven't gotten married, haven't had a child, I haven't, built an extension onto my house, someone hasn't changed jobs or graduated, because we can help you with those things too.
Yeah.
So, but yeah, at a minimum, you want to have, and I want to be able to shake someone's hand and look in their eyes and have a conversation. So if something goes wrong or I have questions, I know I can have that type of conversation.
Yeah.
And so that's, obviously what the service I'm trying to provide to folks.
That's great. Well, you do a wonderful job. You're very honest. You provide valuable feedback, and you're a great resource for us and our clients. And we just really appreciate it.
Yeah. Well, I appreciate the opportunity.
Yeah.
This was
Thank
fun.
you. We'll put in the show notes all the different ways that they can reach out to you and contact you as well. So thank you guys very much for joining us at another edition of Danny Brown Talks Phoenix.
Awesome. Thank you.